One of the first things I hear whenever reverse mortgages come up is, I've heard the bank takes your house. Or, I don't want my kids to lose their inheritance. Sometimes families tell me they've completely ruled out reverse mortgages, not because they've researched them, but because someone told them years ago that they were a bad idea. The problem is, there's a lot of misinformation surrounding reverse mortgages, and unfortunately, those misconceptions often prevent families from exploring an option that may actually help them accomplish their goals. Today, we're going to separate fact from fiction, and one of the most common questions I hear, can you actually lose your home with a reverse mortgage? Hi, I'm Corpus. I'm a Senior Transition Strategist, Realtor, and reverse mortgage specialist based in the San Francisco Bay Area. I help families figure out how to pay for care, especially when a home is involved. Whether they're considering aging in place, assisted living, selling a home, or using home equity strategically, my goal is to help families understand all of their options so they can make informed decisions and avoid costly mistakes. This is another episode of Sandwich Generation Solutions powered by the Simplified Senior Transitions podcast, where we bring clarity to the housing, care, and financial decisions families often face during some of life's most challenging transitions. Let's dive in.
Welcome to the Simplify Senior Transitions podcast, where we help families navigate senior living, real estate, and everything in between. Hosted by Senior Transition Specialist Dale Corpus, this show brings you expert insights, real solutions, and stress-free strategies to make senior transitions simple. Ready to dive in? Let's go.
Myth number 1, the bank takes your house. Let's start with probably the biggest myth. No, the bank does not automatically take your house. If you obtain a reverse mortgage, you remain the homeowner. Your name stays on title. You continue owning the property just like you would with a traditional mortgage. The reverse mortgage is simply a loan that's secured by the home. Myth number 2, you no longer own your home. This is another misconception I hear frequently. Again, the homeowner continues to own the property. That also means the homeowner continues to have responsibilities, including paying property taxes, maintaining homeowner's insurance, keeping the home in reasonable condition, and continuing to use it as their primary residence. Just because monthly mortgage payments may no longer be required doesn't mean there are no responsibilities. Myth number 3, my children won't inherit the home. Families are often surprised by this one. A reverse mortgage doesn't automatically prevent children from inheriting the home. When the last eligible borrower permanently leaves the property, whether because they moved into long-term care or passed away, the loan becomes due. At that point, the heirs generally have options. Depending on their circumstances, they may decide to sell the home, refinance the loan, or keep the property if they qualify and pay off the balance. Again, the family still has choices. Myth number 4, if I live too long, I get kicked out. I've heard this concern many times. People worry they'll somehow outlive the loan. That's not how these programs are designed. As long as the borrower continues meeting the loan obligations, including living in the home as their primary residence, paying property taxes, maintaining insurance, and keeping the property maintained, they generally have the right to continue living there. Myth number 5, the home can grow larger than the home is worth. This one actually has some truth, but there's an important protection families should understand. Many federally insured reverse mortgages include what's called a non-recourse protection. In simple terms, that means neither the borrower nor their heirs are generally responsible for paying more than the home's value when the loan becomes due, assuming program requirements are met. This is one of the reasons it's so important to understand the details of the specific reverse mortgage being considered. So, can someone actually lose their home? The honest answer is yes, but probably not for the reasons most people think. Just like with many traditional mortgages, there are obligations. If someone stops paying required property taxes, allows homeowners insurance to lapse, abandons the home, or fails to meet the loan requirements, there can be consequences. So the real issue isn't that reverse mortgages automatically take people's homes. It's that homeowners still have responsibilities, Understanding those responsibilities is critical before moving forward. There's an even bigger lesson, and this is why I always encourage families to make decisions not based on myths, or something they heard from a friend, or a story from 20 years ago. Reverse mortgages have changed over the years, program rules have changed, consumer protections have improved. Every family's situation is different. The best decision comes from understanding how today's programs actually work, not relying on outdated information. So, can you lose your home with a reverse mortgage? Well, not simply because you have one. Homeowners continue owning the property. Families continue having options. But like any financial product, it's important to understand both the benefits and the responsibilities. That's why education always comes first, because once families understand how these programs actually work, they're in a much better position to determine whether a reverse mortgage fits their goals. Before we wrap up, I do want to mention something important. Every reverse mortgage program is different, and individual eligibility and circumstances matter. This episode is intended for educational purposes only and shouldn't be considered legal, tax, or financial advice. Before making any decision, consult with qualified professionals who can evaluate your specific situation. This has been another episode of Sandwich Generation Solutions, powered by the Simplify Senior Transitions podcast. If you're trying to figure out how to pay for senior care, especially when home is involved, I've created resources to help families better understand their options before making important decisions. Start here for personalized guidance, educational resources, and access to my AI Resource Explorer by going to simplifyseniortransitions.com/start here. And if you'd like to explore more conversations with senior living experts, elder law attorneys, home care leaders, financial professionals, and families navigating these decisions every day, visit the podcast library at simplifyseniortransitions.com/podcast library. If this episode helped clear up some of the myths surrounding reverse mortgages, I'd really appreciate it if you'd subscribe, leave a 5-star review on Apple Podcasts or Spotify, and share this episode with someone who's trying to make informed decisions about an aging parent. I'm Dale Corpus. Thanks for watching, and I'll see you in the next episode of Sandwich Generation Solutions.